Hey folks, and welcome back to another video on my YouTube channel. In today's video, we'll be talking about the ICT Fair Value Gap, which you've probably heard about. It is one of the most used and talked about ICT terms there is, and of course there's a reason for that. So in this lesson, I will go over everything you need to know about the ICT Fair Value Gap. So a Fair Value Gap is basically a 3-candle pattern, I guess you could call it, right? You need 3 candles for it to form. And all it is in this case, we have a bearish fair value gap. And then you would take the highest point of this candle and draw that out. Take the lowest point of this candle and draw that out, right? And there you have your ICT fair value gap, okay? This is the fair value gap. And the reason that this is a fair value gap is because the highest point of this candle and the lowest point of this candle are not overlapping, right? So had it looked like this, it would not be a fair value gap, right? Because the wick of this candle and the wick of this candle are overlapping, right? There's no fair value gap. There's no inefficiency, okay? And on a bullish fair value gap, you have exactly the same. You take the highest point of this candle and the lowest point of this candle, and if the two are not overlapping, you have a fair value gap, okay? And that is basically all it is. And ICT believes that the market is coded on an algorithm, right? And that algorithm has different things that it seeks. And when he talks about this, he mentions 2 things. He mentions liquidity, which I also have a video on. If you don't know what that is, I would highly suggest go watching that. And inefficiencies. Okay, so liquidity and inefficiencies is what ICT talks about when talking about what the market seeks, okay, or is drawn towards. So a fair value gap is an inefficiency, right? If this wick and this wick are not overlapping, everything in between right here is an inefficiency, right? There's an inefficiency in the market. And what price typically wants to do is to fill out that inefficiency, right? It wants to balance out that inefficiency. And the way it would do that in a bullish scenario is, let's see, if this candle's wick goes down here, right? Then all of a sudden the lines that I drew are overlapping with a wick, which means that that fair value gap has now been filled, right? There's no inefficiency left there, right? And on the bearish fair value gap, this is what it would look like, right? You would have another candle right here, right? And if the wick of this goes in, it doesn't have to be the wick, it can also be the body, but as soon as the price trades through the fair value gap or the inefficiency, that area has now been rebalanced, right? There's no inefficiency left. And that is what the market wants to do. That's what it seeks, okay? So now let's look at a few examples of an actual chart and not stuff that I drew. So let's do that. Okay, here we are. As you can see, we have a perfect example of a bearish fair value gap, right? Because the highest point of this candle and the lowest point of this candle are not overlapping, right? I can draw a line from the lowest point here and the highest point here, right? And there's an inefficiency, right? And what did price do? It came up, filled the inefficiency, and then came back down, right? But I want you to know that this does not happen all the time, right? Sometimes price just taps the fair value gap and then goes down. That is why most of the time you would want to place your entry at the beginning of the fair value gap, okay? You do not want to try and predict whether price wants to fill the fair value gap now or just use it as some sort of resistance or support. Okay, you don't want to predict that. So to be safe, you place your entry at the beginning of the fair value gap, right? But as a lot of ICT traders do, they would look at this as a liquidity sweep, right? We took out these highs. You cannot just trade a fair value gap alone, right? You need to apply it to a model or a strategy or something, right? You cannot just trade the fair value gap alone. So in this case, this would be the ICT 2022 model almost, right? We have a liquidity sweep and then a fair value gap form. And then you would enter off of that fair value gap, but only because we took out the highs, right? So you applied the fair value gap to some sort of ICT model or concept, right? You can't just trade them recklessly, and I'll show you why. So as you can see, we just swept these two highs, and we had a bearish fair value gap that worked perfectly fine, right? This bearish fair value gap worked fine, but what about this bullish fair value gap right here? Right, that's also a fair value gap. Right, that failed very, very hard. And the reason for this is because had you taken this, you would have not applied it to a model, right? Because you do not want to go long after we just took out some significant highs. So that is just a perfect example of why it is important to apply it to some sort of model or strategy and not just trade it on its own. Okay. And I think I saw another example right over here, right? We came down here after sweeping all of these lows, right? So then I would probably not be looking to sell. And what happened? We had a bearish fair value gap right here that failed miserably, right? Because you applied it wrong. You didn't apply it to a proper model, right? So it is important to not just go in tomorrow and start trading every fair value gap you see. You need to apply it to a model. And I have plenty of videos on my YouTube channel. I use fair value gaps in my own strategy. So if you are confused on a strategy, you don't know what to do, you don't know what to trade, I would highly suggest going on my YouTube channel and watching my video that that explains my strategy, and then give that a try. Okay. But let's look at a bullish fair value gap example. Okay, there is one right here. Right, we came down, we swept all of these lows, and then we had a fair value gap form, right here. And what did price do? This is another great example of price not always needing to instantly fill the inefficiency, right? In this scenario, price just tapped the inefficiency and then skyrocketed, right? It did not need to fill the efficiency. Maybe it wanted to do it later. Eventually, it is going to get filled, right? But in this case, it just tapped it. So that is why it's important to place your entry off of the beginning of the fair value gap and not the end, right? So this was a bullish fair value gap example, again, because the highest point of this candle and the lowest point of this candle are not overlapping. I can draw a fine line here and a fine line here, and that space in between would be your fair value gap or your inefficiency. Okay. And I want to include something real quick in case you are confused about when you hear this. A lot of ICT traders talk about this, right? A bullish fair value gap could also be referred to as, this is a bullish fair value gap, right? This could also be referred to as a busy, right? A buy side imbalance, sell side inefficiency. That is just a bullish fair value gap. And a bearish fair value gap, right? There's one right here. A bearish fair value gap could also be referred to as a SIBI, okay? A sell side imbalance, buy side inefficiency. So I just wanted to clear that real quick in case you've heard somebody talk about this. A SIBI is just a bearish fair value gap, and a busy is just a bullish fair value gap. So I hope you enjoyed, and I hope you learned a thing or two about fair value gaps. And tell me in the comments below if you learned anything I could do better. I would really appreciate that. And as always, I appreciate the huge amount of feedback that I've gotten this fast. It really gladdens me that there are people out there that can use my advice to something. You know, I love helping people on their way because this is my passion, right? This is what I do all day. So I figured I might as well try and help people while I'm doing it. So I hope you enjoyed. And until I see you next time, stay blessed and bye-bye.